Are live. Hey guys, how's it going? It is Monday. I have Mark on, and we actually have a special guest who is joining us today. We've got Kevin Jarvis, who is not driving his truck today, so he is tuning in. So, Mark, let me, as we go, I'll let you start. I'm sure Kevin will jump in. So, yeah, go for it, Mark.
Yeah, hey guys. Here we are, another Monday. Just kind of coming back with where we're at. So the market itself continues to go nowhere in a sense. So it's kind of been the story for the last 4 or 5 weeks. And so the market just continues doing that. Right now we're still stuck in this sideways pattern, which I've been talking about. So a sideways pattern means that we're moving, but we're stuck within a range, and we're just kind of moving sideways. We're not really moving up or down, which, obviously we all want it to move up, but at least it's not going down, right? So we have that. So it's what we call consolidation. So, the market had moved up super rapidly, and then the market dropped way off, and now it's kind of consolidating. And, from a technical perspective, the longer that a chart consolidates for, the more energy that it builds for a new run. So, although we all wish it would just hurry up and go somewhere, the fact that it's stuck in this consolidating pattern for so long actually is a good thing for us. In addition to giving extra time for people to come in and get good positions right now, the longer that it stays in this consolidation, typically the more energy it will have to get back on the next bull run. So, if we continue in this pattern for a few more weeks, although it's not ideally what we want to see, it should lead to a longer and a stronger bull run when the bulls finally return. So that's good. Think about it in a good term. As we talk about, right, the markets don't move in a straight line ever. And so it's important to kind of understand these things. So you can feel good about it. So what's going on, what to expect, and so forth. So that's what we're doing. We're consolidating. I mean, basically, last Monday when we were on this call a week ago, the market cap, again, which is, all the coins, Bitcoin, Litecoin, Ethereum, all those added up, the market cap was at about 520 billion. That was on Monday a week ago. On Thursday of last week was like our lowest point, dropped to about 417 billion, which was a 20% drop. And today it's back up to like 450 billion. So it's about an 8% gain from the low. But again, we're still right in that 450 range. We've seen as low as 400. We've got up to 500, but it's just moving in that range. So, as far as the market goes, I mean, that's kind of what we're looking at. I know maybe for a lot of people that are new, newer positions are down, but that's just the way it goes. We've had some of our biggest winners, Neo and Ethereum, for example, are two of our biggest winners for last year. We're both down for 5 or 6 months, so it just kind of depends on when you got in. So we have to believe in what we got into and just kind of understand the markets. And that's why I believe that like this research is so important, not for the upside, but to limit us on the downside, right? So we can look at trading scenarios, where people are looking at technical indicators. And I know, like on the call last week, we talked about this, and people are like, well, where's it going to go next? What's going to happen next? And it's like, well, I don't know what's going to happen next. Next meaning tomorrow or over the next week, but I do know what's going to happen over this year. And the reason why I do know what's going to happen this year is because we study fundamentals, right, as opposed to technicals. So technicals can tell us what happened and potentially give us a couple of scenarios in the near future, but fundamentals tell us the future. And so I've seen some really, really strong fundamental stuff going on, which makes me super excited for this year. On Friday, I gave several of the fundamental reasons of what I saw. But today I have some new stuff for you. And again, this is massive fundamental shifts. And this sets the foundation. It sets the base for where we're going to go in the future. And so what I'm starting to see is more mainstream adoption of what I've been talking about. And I'm really happy to see some of the big time people starting to talk about this. So let me explain. Most of you guys are probably aware, Jamie Dimon, he's the CEO of JP Morgan Chase. You know, he came out and said Bitcoin was a fraud, it was a scam. Anybody that invests in cryptocurrencies would be fired. I mean, he went pretty hard on that, right? And that was last year, towards the end of last year. And the market crashed pretty hard off of that. I mean, he's a big time guy. I mean, he's head of JP Morgan. It's the largest bank in the United States. So when he talks, I mean, you have to listen. But that wasn't the first time that he's talked bad about Bitcoin and cryptocurrencies. I mean, he's been quoted all the way back in 2014, saying that it was only used for illicit purposes. It was a terrible store of money. In 2015, he came out and said that, you know, anybody that's messing around with Bitcoin and cryptocurrencies is just wasting their time. Then, like I said, in 2017, he said it was a fraud. I mean, a guy that I really respect and I quote all the time, Ray Dalio. I mean, for those of you guys don't know, he's like the head of the largest hedge fund, Bridgewater Capital, one of the most successful investors of all time. You know, he said that he thought Bitcoin was a bubble and it wasn't an effective store of wealth. Larry Link, he's the CEO of BlackRock. BlackRock is one of the largest asset managers in the world. I think they have like over $5 trillion in assets. I mean, they're massive. And he says that the demand for Bitcoin just shows how much illicit activity there is in the world. You see, all these people are hitting the same point, right? Bitcoin, cryptocurrency is only used for illicit activities, only used for terrorism and drugs. None of us like those things. And so since I don't like terrorism or drug dealers, then I don't like Bitcoin, right? So that's
Mark, that's crazy. That's like saying, oh, cash is used for terrorism and drugs, and I don't like cash. I don't mean to get emotional.
Well, they don't like cash either, right? They've been trying to outlaw cash as well. For that very. But you're absolutely right, Charles. I mean, all the research shows that all money laundering and illicit activity is done in cash, right? Cash is truly anonymous. Bitcoin is open source. It is the exact opposite of anonymous. Everybody can see everything. Anybody can see my Bitcoin wallets and see how much money I have in them. We know Satoshi Nakamoto's Bitcoin wallet, and we know that he's got billions of dollars in that wallet. We also know that he hasn't spent one single penny or transferred any of it out. So we can see that it's all open source. I was just kind of setting the stage though. So Alex Weber, head of chairman, of UBS. UBS is one of the largest banks in the world, $1 trillion. And he said that he thinks that it's again just used for illicit activities. But what happened is, if you guys remember back in December, I talked about there was a big meeting in New York, and it was like all like the bankers that were there. And this is when I said we should buy Bitcoin up to 25,000. I got extremely bullish because there was this huge meeting in New York of all the bankers. And what was talked about at that meeting is that there was a new study done. And this new study was done by Wall Street. And Wall Street did a study that showed that Bitcoin and cryptocurrencies were not correlated with the stock market. And the reason why that's so important is that the stock market wants you to invest, right? If you don't put money into the market, they don't make money. And they want the market to be less volatile. They want it to remain mostly flat. They don't want it doing this, the volatility. The reason why is if the market's volatile, you're going to want to get your money out. So they want to produce this flat, even consistency. So what they try and do is they try to pull in different types of assets, which we all should be doing. They try to pull in these different types of assets to try and even that out. And the reason why this study on Bitcoin was important is because it showed it was not correlated. And so because it's not correlated, they want to pull it in with their other investments to help even that out. All right. So that's what I talked about in December. And that in my mind is massively bullish for Bitcoin and cryptocurrencies. So the reason why I bring that up again today is because Jamie Dimon, head of JP Morgan Chase, is back making noise again. And so JP Morgan actually put out this giant report, and it was called Decrypting Cryptocurrencies is what JP Morgan put out. And a lot of people in the industry, in the financial industry, they're calling this like the Bitcoin Bible because it was put out by JP Morgan, and it talks about this. And I'm not going to go through the whole report for you, but I'm going to basically summarize it. And he said that, cryptocurrencies are unlikely to disappear, which of course we already know that, right? It's technology, it's not going away. But what he said is that in conclusion, what we found is that if in past returns, volatilities, and correlations persist, cryptocurrencies could potentially have a role in diversifying one's global bond and equity portfolio. So that's exactly what I talked about in December. Now JP Morgan, in this massive, what the industry is calling the Bitcoin Bible, this massive push to cryptocurrencies, is basically echoing that, saying that it's a way to diversify the global bond and equity market. So the largest bank in the United States, one of the largest banks in the world, is now telling other banks that they should be taking on Bitcoin and cryptocurrencies to help take the volatility out of portfolios. So this is massively bullish news, right? So it goes back, like I said, to what I said in December. So we're going to start to see these banks start to dip their toe in the water and add a little bit more exposure to their portfolios. And as I said before, right, it's going to be like a domino effect. Once one of them does it, they're going to start doing it faster and faster. So although we're in a sideways trading, pattern, it's a good thing. We're building energy for the next run. And the news that continues to come out is just so bullish for the industry that I still feel so good about the market this year.
Now, we might have been sideways, but, I heard Kevin, you were playing some nano games earlier this week, and you've been shooting. You want to talk a little bit about that for a sec?
Oh, yeah. Well, yeah, I don't even want to jump off Mr. Diamond first. I want to jump on him first because, like you were saying, he's been talking bad about it for years. But if I don't know if everybody knows, since I've been jumping into the space, I've been doing a lot of research. And Mr. Diamond and his company have been trying to get the developers since early 2017 working on cryptocurrency. And now they almost one of the leaders in the banking industry as far as getting a group together to actually implement their system. So for him to say what he was saying, scaring folks, especially talking about firing people in his company who's even trying to purchase any, yeah, that sounds a little bit skeptical and funny to me. And now to say, what was it, 2 weeks ago when somebody dropped almost $40 million on Bitcoin, I won't be surprised if that was somebody that he had went ahead and did that, because he's seen the potential. He know that he missed out on the first gate, and now he's trying to jump in before any of the other banks jump in and put their toe in the game and leave him behind, because no one wants to be behind. Yeah, so I think Mr. Diamond, he playing a good mind game with the rest of the banks, and some of them ain't gonna fall for it. But talking about that Nano, I was just so excited about Nano. When we first jumped in, and then it went up, and then when I went on CoinMarketCap and I seen that all the coins were actually sold, I was like, wow. And with the market down, and like you were talking about before, Mark, with loose hands, and people just started selling off, which means folks with strong hands was buying. Sooner or later, it's gonna come to the point to where only strong hands is holding it, and that price can't do nothing but raise since all the coins are already in circulation. And the project is already amazing, so it has nothing. It can't do nothing else but grow. Now, how fast? I wish I knew. But hey, I'm in it, and I ain't going nowhere from it.
Well, we don't know.
Today,
right?
The other news.
We don't know, right? That's the whole thing. The timing, we can't figure out.
I wish I did.
we all do, right? But that's why, as I always cite, I always kind of say what Warren Buffett was famously quoted as saying, right? The markets are super efficient of moving money from the inpatient to the patient. So like what you're saying, Kevin, right? You looked at Nano, you see how good of a company it is, you see how cheap it is, how far it's off that high. And so we're just going to be patient, right? And if we have to wait 5 or 6 months to see some good movement, like with Ripple, for example, I mean, it didn't go anywhere for almost 6 months. And then within weeks shot, up a few thousand%. So we just have to be patient. Unfortunately, we can't time the market, but yeah. Good stuff, Kevin.
Yeah.
Wow.
Yeah, and then that big news that came out today where they actually put in the SegWit that actually goes into implementation today on the 26th to make the Bitcoin move faster and cheaper. Coinbase in trouble. They got to put some more coins on there, something to make up for that difference.
For the fees.
You're actually right about that. I mean, Mark, you're talking about the market looking sideways, and I checked my account, and I'm up 10% this morning. I mean, that's kind of exciting to me. And that's more than sideways momentum. But Kevin, you brought up a good point. You know, SegWit now has been released as part of Bitcoin Core. And Mark, would love to get your thoughts on it, or Kevin, if you want to add in on that front. I mean, what do you think? I mean, that's big, I feel, right?
Well, I went in depth on that on Friday. So, and I guess for people that missed that call, we can get into that. But yeah, I talked about that on Friday, how bullish that was for the case for Bitcoin, right? Again, right, we're looking for fundamental reasons why we expect to go up in the future. And so, to recap, a quick recap is that the whole conversation last year and even really into now is that Bitcoin is too slow, it's too expensive, and it's never going to be able to be used on a daily basis, being slow and expensive, right? So that's been the narrative. That's what caused the fork into Bitcoin Cash in August. So everybody, all the developers, all the coders, all the miners, they got together in New York in August. They formed what's called the New York Agreement, and they all decided to do an upgrade called SegWit. And what happened is it was called a soft fork. So there's a hard fork and there's a soft fork. In a soft fork, what happens is that the developer, the miners could still run the old software. On a soft fork, they're not forced to upgrade. So even though everybody voted in consensus to put SegWit in, nobody actually had to run SegWit. And so, and at the same time, some of the developers said, you know what, we're just going to go create Bitcoin Cash and we're going to be faster and cheaper. And so, you guys already know the history of Bitcoin Cash. They've been attacking Bitcoin and blah, blah, blah. Well, SegWit, because it wasn't forced as an upgrade, it was a soft upgrade, it really hasn't gained much adoption. It's just been super, super slow. But it's been slowly gaining momentum. And now, several months later, we've grown enough momentum where finally, as Kevin said, right, it was Coinbase and Bitfinex. They both came out and said that they were going to activate SegWit. And so, for those of you guys that don't know, basically what that does is it makes transactions faster and cheaper. And on top of it, what it does is it opens up the gateway now for them to install the Lightning Network. And what the Lightning Network does is it will allow off-chain transactions. So we have the blockchain, right? It's the main chain, but sometimes settlements can happen off the chain and then they get recorded on the chain, and that helps things move much faster. And so by activating Lightning Network, I think we can see transactions on Bitcoin happen almost instantaneously for like almost no cost.
Wow.
Yes.
Yeah.
Wow.
And here comes the big money because they know it's going to start happening.
Yeah. So so good stuff, Kevin.
Same thing like Litecoin.
Yeah. So Litecoin was created as a fork or a copy of Bitcoin, and they've called Bitcoin digital gold. They've called Litecoin digital silver, and so Litecoin started as a copy of Bitcoin, and really they've been ahead of everything, and they activated SegWit a year ago. They activated Litecoin Network a long time ago, and they've been pioneering this. They've been doing atomic swaps and kind of being the test for Bitcoin. And so every time, and that's why we added Litecoin to our fast movers a few months ago, is because they had activated Lightning and then the atomic swaps. And because they're so successful, we see that technology moving to Bitcoin. And I think it's super bullish for both of them. I like Bitcoin and I like Litecoin.
Yeah, you call it consolidation. I call it the slingshot effect. Because soon they're going to let that band go and we're about to take off. So, yeah, I'm happy. As long as it consolidates, I'm good. That means I could jump in as many as I can, as cheap as possible, and know I'm going to make something, like you said, towards the end of the year. It's going to be terrific.
I haven't heard that term before, but I like it, actually. The slingshot effect. It's like when you're a kid, one of those cars that you can roll backwards, right? And then you let go, and then shoo, it takes off.
Yeah. No, that's great.
Yes, sir.
So wanted to kind of maybe change the topic a bit and stuff like that. I've been doing some research as of late on, public versus private blockchains, and would love to get maybe some feedback on your end on this, Mark. I've been looking I don't know if you're aware, we've been, deploying our love token and have been diving into the code. And one of the things that, I've noticed is, right, it's almost like there's two versions of blockchains out there. There's, our public blockchains that we know of, Bitcoin, Ethereum, all the ones we know and love. And then there's like the Death Star of these private blockchains, right? There's Ripple, and then all these like IBM blockchain and Deloitte and Touche blockchain and everything on that. And would love to get your thoughts, or maybe if you could give us kind of a quick overview. I've got my opinions, but Mark, maybe if you want to start by just kind of differentiating, what is the concept of a public blockchain versus a private blockchain?
Well, I think the title sums it up, right? One's public, one's private. So as I talked about with Bitcoin, it's the exact opposite of anonymous. The banks want to tell you it's all only for drug dealers and terrorism because nobody can see what's going on, but that couldn't be more false, right? Everybody can see everything because it's public. And not only is it public for us to see the transactions, but most of it's open source, so anybody can go and see the code. Now, so that's open, right? Those are open blockchains. It's open source. Now, what Kevin was talking about is like JP Morgan's invested in blockchain technology now. Bank of America has patents on blockchain technology. And so you have lots of private companies that are taking the technology, the blockchain technology, and creating their own versions of it. And it's private. They have it patented. They've spent all this money and they don't want it to be open source. Bitcoin was created for the people, by the people, open source for everybody. But of course, people want to control it. So although Bitcoin was created for an ideology of being open for everybody to use, at the end of the day, people want to control it. And so we're having lots of companies like Charles mentioned with Ripple, or like what Kevin talked about with JP Morgan or Bank of America. They're creating their own blockchain technology, but it's private. And so they're using blockchain technology, but they don't allow you to see the code behind it and stuff like that. So
let's dive into a little more. So it's like, I guess if we were to compare public versus private blockchains, and let's look at, blockchain applications, I think Ripple's probably the most public example of a private blockchain that, you and I can get involved in, right? So I can go buy XRP tokens, but my XRP tokens power a private blockchain, but it's not like I can just go, write a dApp and throw it on Ripple and call it a day, like how I can do with Ethereum. Like, why don't we expand upon that and, explore this concept a little bit? And I know I might get a little technical, Mark, so why don't you try to keep it at a high level, and I'll obviously dive in to the specifics and stuff on that front.
Yeah, I mean, I can talk on the technical side too, but I'm not exactly sure where you want to go with that. I mean, we kind of identified what a public and a private is. What's the question?
I guess let's look at it from an angle of, hey, why would Ripple want to be a private blockchain instead of being a public blockchain, right? What are the benefits of doing a private blockchain? Because yeah, it's easy to say, oh, okay, they're just a bunch of, big bankers that want to control things, but there has to be a reason, outside of, nefarious control reasons to.
Well, I mean, so I guess if you want to start from a super high level, I don't have a problem with that. There's no reason why it needs to be open source and public. They're a private company. Like Charles, I know you're what you said, a blood-sucking capitalist. So if they want to create their own technology and use it in-house, then great. If I want to invest in it, I do. If I don't, I don't. And I don't have a problem with that. See, I think you need to kind of take a couple steps back and look at what is Bitcoin and what are cryptocurrencies and what is blockchain. Okay, so Bitcoin. So to back up, just the internet is a technology. The internet technology allows computers to share information. Zillow is a website where you can look at real estate information. And Facebook is a website where I can share social media. Zillow and Facebook are nothing alike other than they both use internet technology. Now we have a new technology called blockchain. And now there's 1,500 plus cryptocurrencies with blockchain technology. But they're not the same either. They're just as different as internet companies are. So Bitcoin was created to be money. And because Bitcoin is supposed to be money and I'm putting my trust into Bitcoin, it needs to be open source for everyone to see what's going on. how can I trust something if I can't see it, right? But with the case of Bank of America or Ripple, for this example, I don't, to use that technology, what Ripple's trying to do is replace SWIFT with money transfers between banks, wire transfers. There's no reason why that has to be private. SWIFT, or public, I should say. SWIFT doesn't open up the technology for everybody, and yet it transfers trillions of dollars. Ripple's trying to replace that. So I don't see why it needs to be open source. I don't have a problem with it being private. I can see why most companies creating their own private blockchain technology want to keep it private, right? They have proprietary stuff they've done, and they don't want that to be open, and that's fine. But I think that's why it's important to differentiate money versus technology. Money needs to be open source. Like, we want the Fed to open up their books and have an audit, but they deny it every single year when it's requested, right? And we don't like that. Why are they hiding the money? So Bitcoin should be open, other ones be private. I'm cool with that. I don't know, does that help?
So what's interesting, and maybe now that you've given a good overview, and I'll expand kind of where my direction is, because I've kind of kept it, I've been a little cagey to start. We've been looking at the Ethereum network. We've obviously deployed a fun little token on our own, the Love token. If anyone has not heard about it, we have a fun airdrop coming up, so just sign up. The info, I think, is either in the comments on top or below. But we've been deploying this Love token on the Ethereum network. And what's interesting is, in terms of how the smart contract has to be written, in terms of, the whole immutability side of it and everything like that, the entire transaction of the smart contract, from your source code to all the operators and everything like that, actually has to be done within the blockchain. That's currently, as I understand, how it's implemented. And, I'm not in any ways an expert Ethereum developer. I've just been playing around.
But that's not completely true, right? So as we just talked about with like Lightning Network, and what we see with Ethereum all the time is all the new technology being built on Ethereum now is working on off-chain solutions. So coins that are in the Jarvis portfolio, like 0x, like AST, the way those work is they're built on Ethereum, like you're saying, but they do everything off-chain in order to make it faster and cheaper.
Okay, so that's interesting. So what I've been looking into is, it appears that the issue with Ethereum is that all my smart contracts and everything is on chain, and myself, like, if I was a private company that wanted to build something and run on the blockchain, I wouldn't want to actually run it on Ethereum, because, I don't want all my secret sauce or my code exposed. Like, ultimately what I think people care about is that I fulfilled the promise I was going to make, and that was immutable, right? But now you're saying there's these off-chain scenarios, but I guess, I've been looking into the Ethereum, and it doesn't seem like there's an easy or practical way to implement it on that front. And again, I'm still literally like in the midst of the research, and we're messing around with various things on that front. So that's intriguing in terms of how you say 0x or AST or some of these other, projects interact with the blockchain.
Yeah, that's how most of the stuff's being done now, to exactly what you're doing, speed it up and make it faster, right? So every transaction on the Ethereum blockchain costs gas, right? It costs Ether tokens. And so that's why they can process a lot of the information off-chain and then record it up when it's done. Yeah, so that's one way it can be done. But like I said, if you want to build your own private blockchain or use a public open source blockchain, I think it just depends on what it is that you're trying to do. And if for some reason you want to build your own proprietary stuff and keep it private, depending on what you're trying to do, I think that's fine. If it was money, I wouldn't trust it. But if you're some new company with new technology, then whatever. I probably wouldn't have a problem with that.
I got a question for you, Mark. Yeah. What do you think about the actual money coins using Dragon Chain to go between the different blockchains?
Well, obviously, I'm a huge fan of Dragon Chain, right? But unfortunately, we haven't really seen all the applications of what Dragon Chain can do. So I don't really know what it's going do in regards to money. I think bigger than just Dragon Chain, what we're starting to see is this trend towards interoperability. And so everybody knows, right, we have the 3 keys that we look for: scalability, interoperability. So interoperability means that blockchains can work between each other. And so there's lots of solutions that are out there that are starting to be interoperable. Neo was one of the first ones that set out to be this interoperable blockchain. And so Dragon, lots of people are getting on board with that. And I believe that's the future. I mean, there's going to be so many different blockchains like Charles is bringing up, right? We're going to have public ones and private ones. We're going to have online ones, offline ones. And so we need solutions that can bring all this together. Wand Chain is one that I've been following super close, that I think is going to be really, really big in that space. It's not available on the market yet, so don't go looking for it, but I'm going to keep you posted on that. But there's a lot of solutions like that, and it's going to be big.
Yeah, I can't wait.
Yeah.
No, definitely. Lots of exciting things. So going on, back to this, call it public or private side, I guess, what are your thoughts, Mark? I mean, do you see the future? Is it, is there going to be a meshing of some sort of, public-private type of a thing? Do you think people will move more towards off-chain type transactions or processing and then just use the blockchain as a general ledger,
Well, I guess if you're asking like where the trend would go, I would imagine we'll start to see way more private blockchains, because as I'm saying, I don't believe they need to be public. I think if I wanted to build on an existing public blockchain, great. But if I want to develop my own technology for whatever reason I may have, I know how to do it better, whatever, right? Then it can be private. Now, again, it depends on what you're trying to do. So if you're like, if you're going to figure out a way to track global logistics using the blockchain technology, and you came up with a proprietary way to do that, it's a private blockchain. That's cool, and I might still invest in that company. But if it's money, right, then I probably want it to be open source. So I think as we get more away from the money side and get into the technology side, I see it going more private blockchain, and I don't really have a problem with that. But I think at the end of the day, like what Kevin brought up with Dragon Chain and these other coins, the ability to connect them, public to private, on-chain, online, offline, to connect everything is going to be super important.
Interesting. Yeah, no, that's definitely an interesting thing. I guess, it's part of this conversation has come up is we've been looking at some type of, blockchain traceability applications. And specifically speaking, I was looking at the field of accounting thinking, hey, blockchain for accounting would make a lot of sense because there are so many businesses out there that, like we all get our taxes done or we all do our finances and stuff, right? So if that was on the ledger, that would hypothetically even remove the need for, I don't know, if accountants or the IRS or anything like that, because our financials would be on the ledger, it'd be immutable, everyone would know what would happen, and we just have to pay our taxes, and that whole runaround would go away. That seems like a good problem to solve. But then I got to thinking, hey, I don't know if I really want that. Like, there needs to be some level of privacy, because the last thing I want is the financials of a company, if I'm the owner or something, being on a public blockchain for everyone to go read, right? No one wants their personal financials out there.
Nor should they be. Obviously, I'm a big fan of privacy. So I believe everybody has the right to privacy and deserves privacy. So yes, some of those things. So I use QuickBooks Online, right? Everything's gone away from like installing software on your computer. Now it's all online SaaS, right? So basically, my QuickBooks is an online ledger, and I record my deposits and withdrawals. The difference is it's my private online ledger as opposed to being an open source public ledger, right? So
correct.
For that, I mean, there's no reason for it. It already is an online digital ledger. It just doesn't require blockchain because I should have the right to go back and change those records as I need to.
Okay, so that's interesting. So let's say you, but I guess what I'm saying is let's use the example of QuickBooks Online, because I didn't want to get into specifics, but that's probably a good example that everyone gets with. I feel that, we were just kind of spitballing the concept of having, all my financial data in QuickBooks, right? So then if I want to go get credit for my business, I then have to register for this Dun & Bradstreet thing, and Dun & Bradstreet then audits my stuff, or I register with, all these various financial organizations so that I can then access capital for my business or everything on that front. And then in order for me to register for those, sometimes I have to pay a third-party auditor, an accountant, to either do a review or do an audit or to issue an opinion on whether or not my books are legitimate, or if, we've been changing things around or things like that. So the idea or the concept is, well, there are probably certain portions of my private ledger that I want to make public, because it would make for a more efficient way of just transacting and operating business.
You can. You could invite anybody to view your QuickBooks Online account. It's easy to put an email in.
Online is not immutable, for all intents and purposes.
You wouldn't want that to be immutable, because all of a sudden now, let's say this year, the Trump tax reform goes through and he says you can write off losses for the last 5 years. Well, now I need to go amend my tax returns and refile them.
Well, but you can. Immutability doesn't mean you can't change it. Immutability means there's an audit trail, and I guess the way I look at it is, with QuickBooks today, I can just go delete old transactions, or I could just add new transactions. And I would imagine the proper way of doing it, and from talking to any accountant, they hate the fact that, like the quote unquote better accounting packages, once you get into like a Great Plains or some of these Dynamics or some of these more, enterprise level things, is you can still do ledger entries to adjust things, but you can't actually delete old ledgers or adjust them or update them, Do you see what I mean?
Yeah.
Some level of immutability on that. I mean, I was just thinking, from that to like, taxes. I mean, obviously none of us like paying taxes, but it's better, I think, that, taxes are what taxes are, and you just got to pay them, because you can't, cook your books to do all. Like, I feel certain applications on that, and that's kind of what got into this public versus private. Some sort of hybrid mechanism on the blockchain would actually be really interesting and could solve a lot of the problems out there, because there are certain things that, people shouldn't know at all, right? The amount of money in my checking account, yes, of course not. But if I'm a business and I've been on my, call it QuickBooks private ledger, but my history shows that whenever a vendor bill comes in, I always pay that bill within 10 days. So that makes it where, like, I've got this track record that's built up over 10 years of business or 5 years of business that's been recorded on the blockchain, so that any other vendor coming to give me credit, instead of them having to go through some whatever their processes are and have all that risk and that trust, they can literally just view the blockchain and say, okay, here's a company that in the last 10 years has paid every bill within 10 days of issuance. That means they're a good credit risk. Here's a company that, yeah, sometimes they're at 10 days, sometimes they're at 30, sometimes they're at 60 days, maybe we put them in a B rating instead of an A rating. Like, I feel there are certain applications on that end that, a hybrid approach might actually be pretty interesting and could solve a lot of inefficiencies out on the market today. I'm not sure what your thoughts are, on that. I'm not,
Well, I can see the benefit of what you're talking about. I don't see why that couldn't be possible today. I don't see why you need blockchain to do that. So let's say, for example, we can go on about privacy, but if you're, let's say, a publicly traded company, well, then your stuff should be public, right? And so they do. They release all their information. But you're saying, well, rather than having them release it every quarter or every month, maybe it should be open in real time. So they could do that. Why couldn't they just open it up so you or I could log in and look at the books of any of these publicly traded companies, and we could see their receivables and their payables and see when they paid their bills? They could do that today. And so we could get into this this conversation about should that happen, yes or no. I don't think that's a conversation we should have. I think the conversation is, do we need the blockchain to do that? And the answer is no. Why don't we just do that today if you thought that was needed? Now, I will go back to say that, and I've said many, many times, human beings are unable to see the future. And the reason why is we can only imagine a better today. We have cars. In the future, we'll have flying cars, right? We can only imagine something better than we have, but the future is actually different. So, you know, as I always said, right, in the 1997, we could email and chat. We thought that was cool, but we didn't know today we'd have something called a cloud, and our cars would be hooked up to it, and they'd be talking to us, guiding us using social media around traffic, right? We couldn't see that. And so, although we can try and hypothesize, would it help public traded companies and their bill payments? Maybe. And maybe in the future there might be something like that. Just as we're talking about it today, I don't see why we need blockchain to do that. And I'm not ready to have the conversation as to whether they should even do that or not.
Yeah, I guess, you know, what stymied this whole thing is, you know, for one of my other businesses, we go through as part of a loan covenant with the bank, you know, we have to pay for an annual audit. So we spend, you know, probably close to 50 grand a year just having someone come in and audit our books, you know, just to get that third party trusted verification. So the bank, you know, feels okay, you know, maintaining the loan covenant. And I guess that to me, I guess what started the whole thing is that to me just seems really inefficient, right? Why am I paying someone else to come look at the stuff on that if I had an immutable ledger and we all quote unquote trusted it, for lack of a better term? I could save 50 grand a year just to service my loan. And, you know, that falls back into, you know, my cost of capital, you know, all these sorts of things that,
But I
you know,
guess once you paid one of those big four firms to come in and do an audit, that is immutable, right? You have this audit that Deloitte just did, and now that's immutable, and that's your record. And I guess that can be recorded into the blockchain or whatever, but however that's delivered, I guess that's what so when I look at companies that I think would be good fits for us, right? Are they solving a problem that needs to be solved? And are they using the blockchain in a unique way to do that? So does this problem that you and I are discussing right now need to be solved? I guess, but they're kind of already doing that. And even if they did, are they using the blockchain in a unique way? And again, you know, this is the first time we've ever discussed it. Obviously, this could be talked about and maybe figure something out. But just right off the top of my head, it's like, I don't know if that. I guess I could see there's a problem that needs to be solved, right? I mean, having better access to financial records. I don't know if that's really a problem that needs to be solved. But second, to do what you want to do or what you're suggesting and what we're talking about here, I just don't see how the blockchain is going to be used in a unique way to solve that when I think there's already technologies in place that could do that. But again, this is such a preliminary conversation. I hate to God.
Yeah. I mean, we're literally just spitballing at this point. I mean, well, maybe not the accounting side, but look at title records. You know,
title records for sure. That blockchain technology is a perfect application for title records, and that's why we're in with Factum. That's what Factum's doing. So I think title records is a perfect application for it. Yeah.
Yeah. Right. So
actually, Charles, what you're saying is good. What you're saying is real good. Yeah, what you're saying is real good, especially in the transportation industry, because there's a lot of truckers out there that are owner operators that drive around and pulling loads for side companies, and some, they say that, okay, we're going to pay you as soon as your load is dropped, and they don't get paid for 90 days out. So if there was something like that in the transportation industry to where to say, well, this particular broker is not paying the truckers their fee for delivering that load for 90 days, and here's one that's, pays them as soon as the load is dropped and it's verified, a lot of owner operators would go to that broker that's actually paying the drives and not, of course, going to that one paying 90 days out. But we still have fuel, maintenance, and everything else that we have to take care of in the transportation part.
Yeah. Oh, no. I mean, that's another example. I mean, if you think about it, in many ways, it's almost like Yelp, right? You know, a lot of us rely on Yelp for, picking restaurant recommendations or things like that, reviews and stuff. But, the little dirty secret is Yelp has its own little system that, some business owners think it's usury, because Yelp, if there's a bad review, Yelp hits you up and says, hey, if you want to respond to that review, you got to pay us $300 a month. Like that's Yelp's business model in some certain cases and things like that. So, no, that's a good point to make on that, Kevin.
And I think that's more like kind of maybe like the smart contract technology that like Ethereum kind of pioneered, and there's other people doing it now. But yeah, having that smart contract which is when kind of what you're saying, Kevin, where you could enter in that contract where as soon as the load is delivered and verified, then that smart contract could release the funds. And really, you know, Charles brought up an application to title records. I was going to say, I believe there's a good application for escrow services. And that's kind of what you're talking about, Kevin, where you kind of set up like this smart contract escrow, right? So the money gets put into escrow, you deliver the load gets verified, and then the escrow gets released. So I'm sure we'll see that. There's a bunch of companies that are applying blockchain technology to logistics, which is kind of what we're talking about. So I'm sure we'll see some innovation there, but definitely a good fit there. Yeah.
No, definitely. So
do those companies want to release the money sooner, right? Like, but
okay.
Again,
well, I mean, that's definitely a big thing, right? Because I'd imagine what Kevin said. If I'm a small business, and in this case, my small business, I'm a trucker. You know, I outlay my fuel right away. I outlay my food expenses right away as I'm moving my load, and you know, I've got living expenses. So if it's going to take me 90 days to get paid after the work's done, I mean, that's a material difference, I'd imagine. I mean, that just sucks, you know, for lack of a better term, right? If you got to keep, because you've got maintenance on your vehicles and stuff like that, and you know, if you knew that one vendor, if you pick up their load, it's 90 days to get paid, and the other guy, that's 30 days to get paid, you might still do the 90-day deal, but maybe you'll charge 10% more because, you know, you've got a cost of capital or a cost of pain and suffering or whatever you want to call it, you know, to float the guy because you're not a bank, right? Yes.
Yeah.
Cool. Yeah. Well, we've been on for quite some time. Let's get ready to wrap things up. One final thing I just wanted to kind of bring up. Let's talk, you know, maybe just a few technical trends for the week. You know, I've been looking at the charts a little bit. I'm not by any means a chart reader, but, you know, everyone always likes to talk short term. And I'm not saying this is the short term side of things, but, you know, what do you think of resistance levels? Right now I'm seeing it looks like 240 or 250 is a upcoming resistance level for Litecoin. Have you looked at the charts at all yet this morning, Mark? Or?
Yeah, of course. I spent a couple hours on them already. For Litecoin,
I just brought that up. I mean, we could talk charts in general about the markets or anything on that front. I was just looking at it. It looks like there's a pretty strong resistance level on Litecoin. Let me look back at what I was.
Yeah, the one I was looking at just before we started the call was Ethereum. So you know, I think that I think we need to get up above like the 885 levels, which we're at 877 right now. So for Ethereum, we need to get above like 885. That would be like the resistance level we need to push. And then if we could break 885, we might be headed to 985. That's like the next line of resistance. So if I was a trader, which I'm not, I don't sell my Ethereum ever. But if I was, if it broke 885, I might put a buy in. And then ride that to 885, or I'm sorry, 985. I think there's maybe $100 to make on that. I'd probably set a stop loss at 785, but I would wait till at least 885 to make sure it can break that resistance. But to me, I mean, so I think the next resistance, if I bought at 885, I could ride it to 985. That's $100. But I'd probably set my stop loss at 785, which is $100. So for me, the risk to reward isn't there on that trade. I have potentially $100 on the upside, potentially $100 on the downside. I don't like that trade. But Ethereum, the reason why I bring up Ethereum is I think we always talk about Bitcoin and the alts, right? And if you really want to know what the alts are going to do, so typically we see Bitcoin pump, and after Bitcoin pumps, then the alts will start coming up after them. But I think Ethereum is what, you know, the canary in the coal mine, so to speak, right? Ethereum, all the alts are built on Ethereum. So really we can look at Ethereum to kind of see what's going to happen with the alts. You were asking about Litecoin. I think Litecoin is a buy. I think it broke 220, which I like. So I think Litecoin's on an uptrend. I think you could buy it at 220 with a target of like 260. I think that's like the next resistance on Litecoin, 260.
I was looking at it. Looks like there's a pretty strong zone in the mid 230 ranges right now that it would have to break for it to really get going. If that makes any sense.
In what zone?
Basically the 230 to 240. I'm just looking at trades and stuff like that.
For Litecoin?
Yeah, for Litecoin is kind of what I'm looking at.
Yeah, no, when it broke 220, it broke that resistance. So I think like 240 is probably next, or 260. So I think at 220 it was good, and it should move pretty good till 260. But again, I mean, all we do is we look at trends, we look at lines, and we think, okay, look, I think it broke 220, it could move to 260. But if it starts turning down, then I want to get out, which is why I don't really like fundamental or technical analysis. But that's what I'm seeing. Um, um, I like Neo right now. I think Neo is a buy at 132, which it just broke. I think 170 is our next target on Neo. I like that.
Well, that's exciting for all of us.
Yeah, Factum's looking good. I think it was a buy at 0031 Satoshis with a target of like 0046. Nano's still looking good for you, Kevin.
Oh,
I think
yeah.
I think when it broke 0014 Satoshis, I like it up to like 0017 and higher. So those are some of the good ones I saw this morning, but I'm not doing that. I'm just telling you what I see, and I'm a decent technical analyst. I'm not. I wouldn't say I'm the best. I'm not. I wouldn't consider myself even a professional, but I'm pretty good at it. Those are what I see. But again, I'm not doing that. I'm just holding it.
Cool. So right before we wrap up, any predictions for the week, Kevin? What do you think? How's that crystal ball working on your end?
The crystal ball on my end is looking at some of these buys on the long-term portfolio that are almost 50% off from when they first originally started on Jarvis, like AirSwap.
Yeah.
Nice.
So to back up what Kevin's saying, just like some basics of technical analysis, we have what are called like Fibonacci retracement lines. So things typically retreat and then bounce. So we look at these lines, and so typically, when we have an all-time high, especially with the very bullish fundamental news, we expect to get back to that high at least, right? As soon as the market turns more bullish. So now that's not always the case, but in this market, that's what I expect. So what Kevin's saying is like, these are like 50% off. Like those are good buys. Now,
Yeah.
markets are very good at moving money from impatient to patient, right? So you have to be patient. We don't know how long it's going to last. Now, the key to being patient is putting in money you don't need. If I'm going to need that money in a month and I put it in, I may be forced to get it out while it's down. So the key is putting money in you don't need, and you can afford to let it ride. But
Yeah.
I think what Kevin said is definitely good insight.
Yeah, please don't do that, folks. Please pay your bills when you get your tax returns. Please pay your bills first. Don't put that money in here and you can't afford to lose it. Yeah, please don't do that. Yeah, but about what you were saying, Mark, that we have quite a few on the job selection like that, and the highest one that I've seen so far is Dragon Chain.
Yeah. And Dragon
And not
Chain
only
is
that, well, I can't say that. That's not even Dragon Chain. It's KuCoin shares.
KuCoin, yeah, KuCoin is down.
Forex. Yeah, you're talking about Forex if it gets back to the point where it was on January 2nd.
Yeah, and Dragon Chain. Dragon Chain is down. The big Dragon Chain and KuCoin, and Dragon Chain is an amazing project, and I believe it's really going to be big. Yeah, I mean, for those of you guys that don't know, real quick, I mean, it was started by Disney. Disney created it to be what Charles talked about, a private blockchain. It was going to be used for Disney, and Disney decided to spin it out and have it be its own company. And it's headed up by some amazing people. It's got an amazing group of people, a community that support it. So I think it's a bargain.
Yeah, definitely. Cool. Well, do you want to make a crystal ball prediction for the week, Mark, or are you going to defer yourself?
Yeah, I think. I think that we're going to stay in a consolidation pattern for another week. I think. I think potentially. So, when do we know when we're out of a consolidation pattern, right? I mean, when are we technically in a bull market? When are we technically in a bear market, right? So, what does all that mean? I think it's going to take us a couple of weeks before we really get into a good, strong uptrend. Right now, every time we get up, we get back down, and we have buyers and sellers. And so what we say is that no one has control of the market. So in a bull market, the buyers have control, and a down market, sellers do. So right now it's struggling. They're fighting over control. And so I'm going to say my prediction is that we're going to continue in a consolidation pattern for another week at least.
Nice. Great. Well, it's time to probably wrap up now. So thanks for everyone for tuning in for the hour and everything. We always, Monday mornings, top of the morning is when we start the week. Great having you on, Kevin. We definitely want you, hopefully, as a regular guest as part of this whole thing. So till later, guys. Thanks for being on. Thanks for tuning in. And we'll catch up with everyone next week. Talk to you guys soon.
Bye, guys.
Bye.
All right, Chief.